Hello, thank you for having me on your show again. It's always such a pleasure to go poking through these StockCharts.com and coming up with new and interesting things to look at. And so I thought I would come up with a little theme title for today's 5 chart presentation. And my theme is You Can Run, but You Can't Hide. And so eventually, certain things do catch up with us. And where do we want to go during the month of June? So let's just start off by revisiting the seasonality 2 charts that we looked at last time I was on, which seemed like 2 months ago, but I believe it was only 2.5 weeks ago. And at that time, we noted two things. I've got the SPY chart here, and this is pretty typical. We were coming off of the most bullish month of the year, the month of April. And seriously, you could have just thrown darts at a dartboard and bought anything that it landed on. But of course, you guys all know that that's not what really the name of the game is about. The name of the game is relative strength. Where are you going to get your most bang for the buck? And so we'll look at that at the very end. We have a problem here. The problem is that we are going into this nasty month of June, and it's one of the weaker months of the year. So that's where the adage from sell in May and go away comes from. You can run, but you can't hide. Where are we going to park our money? Let's jump over to gold, because I think last time I spoke about gold, correct me if I'm wrong, but I was the only bearish person out there, and that was simply because of a straight sentiment reading. I do not know of any gold bears, and I still do not know of any gold bears, but if you are a gold bull, you might just have to sit tight again for like another month, because the seasonals really don't kick in until this July, August period, okay? And everybody has their reasons. It's because the Fed is printing or this or that or whatever. And the problem is, when all the reasons appear so obvious, but the market's not behaving a certain way, that spells trouble. Sometimes the best moves come when we can't really explain why they are unfolding. So just keep that in mind, and we will look at one gold chart for you. And that is going to be this Newmont, which was one of the relative strength leaders for the whole year, even after this flush down in March. I measure relative strength 2 ways. I measure it off of the cycle lows, so I set my look back period to that cycle low, and I also will look at it relative to the S&Ps. That is my benchmark. So the prominent thing with this Newmont is we did have a very decisive 1, 2, 3 pushes up with a last gasp hurrah. So this pattern tends to form a wedge, you see, because you can draw these converging trend lines, as well as this obvious sell divergence in the MACD. And if you were to look at the gold ETFs, the GDX, and so forth, you will see very similar topping patterns. So what this really needs to consolidate and correct it now, and I'm saying this to all you gold bulls, is you want to see the weekly charts continue to correct down to fill out range and develop before we can truly feel comfortable getting long the gold. And I'm just showing the Newmont chart, but some of the, like I said, the gold ETFs, the gold miners look very similar to this. So sit tight, let this fall out, let it shake out all those people that dogpiled in, and then sit tight with those seasonals and see if you can wait for a little few more weeks to pass, and perhaps the bulls will start to get discouraged and you will start to see a little bit bearish sentiment, which has been lacking. Now, as an aside, I am not a fundamental person, but there are two sides to every coin, and one of the drivers for gold are the central banks across the world, and obviously they're probably not accumulating gold in this environment. My best guess would be that there has been some selling on the part of central banks to raise much needed cash. So you know, I can provide a bullish fundamental case and a bearish fundamental case. So just be mindful. That's why I'm a technician, because otherwise I would just be the most dyslexic person out there. So I'll stick to the technicals, and they still look sloppy. The other thing that we want to be aware of is that many of these NAS shares, in fact, I believe just yesterday or the day before, we had 55 all-time new highs. And we have a case where we rallied up, and a lot of these NAS shares made new highs, and a lot made slightly lower highs. I picked Adobe because it gave a nice shorting signal yesterday and now dropped back below this previous high. So we noticed 2 weeks ago, actually 3 weeks ago, a dramatic shift in the relative strength when you start to look at these stocks against the S&P, and they were dropping off the chart like flies, and we started to see a pickup in interesting things such as financials, even airlines, United Airlines, and the basic dogs, okay? And what they call this is scraping the bottom of the barrel, looking for things that have not moved and trying to take some profits off the table. So definitely this scraping the bottom of the barrel comes later in the cycle. And if you are mindful of these sentiment readings, they have not quite hit frothy levels yet, but you have certainly convinced a number of bears from a month ago that this market did have legs underneath it. So for me, the sentiment reading is really neutral here. There are some things such as investors' intelligence and so forth that can still get a little bit frothier. The put call ratio definitely dropped to low levels. So my point being, we don't have that bearish sentiment as a driver for upside that we did have 2 months ago. We no longer have the seasonals as a driver to the upside. And if we can't go into gold, where the heck are we going to go now that these NAS shares are grossly overbought? This utility sector a lot of times has been a bit of a traditional safe haven, okay? Well, I don't know about you, but this chart looks grossly uninspiring to me. In fact, here's an interesting pattern that you'll start to see on not only a lot of individual stocks that didn't make all-time new highs, but the S&P in general, and that is anytime you have a sharp down and then a sharp back up like we had, and keep in mind this is a weekly chart here, you start to form a triangle, okay? So this is most likely to be continued consolidation. I don't think that this triangle has quite developed enough. So traditionally, utilities have been a bit of a safe haven, a proxy to place your cash, you know, once you wanted to take it out of the higher beta stocks. Kind of looks like it's going nowhere fast to me in general. And that's sort of like the bond market, sad to say. So let's jump over. I just had to have a little bit of a fun with this, because Berkshire Hathaway is normally seen as a little bit more of a value play. Warren Buffett, bless his heart, you know, got a lot of flack, you know, saying, has he lost his touch and so forth, you know, and he sticks to a different category of stocks. And And my whole point is it's not has somebody lost their touch, it's who's hot, who's not, which sectors are hot, which sectors are not, and a little bit of cycle components there as well. And so if you think about the fact that now with this Berkshire Hathaway, Dear Warren has decisively dumped all his airline stocks. Perhaps this is a little bit of a nice cycle low here that could have a little bit better upside without the drag now of some of the weaker shares that he cut his losses short and dumped. So just one hypothesis out there. You're probably not going to make killer gains in some of these things. On the other hand, during the month of June, we are more concerned about cash preservation at this point and where can we put our money where it's less at risk. So there's a time and a place for everything. And just for fun, I like to also look at overseas markets and the international ETFs, and everybody talks about the emerging markets and just leave them alone and so forth. I just wanted to highlight the Canada and Japan tend to be two of the ones that had better bounces off the lows, okay? And so you see as well a lot of stocks and currencies and international ETFs are all at this big gap level, just like the Russell is approaching this interesting area and the DAX just closed a gap. So it's not a great place to put your money. It's not going to go down. It's just confirming the fact that everything is due to fill out range and form a big equilibrium level here. So we certainly can't look for enticing overseas opportunities for relative strength. These have already bounced well off their lows. Probably not huge risk to the downside here, but it's going to be mighty tough going from here. And I actually thought that Japan looked the most interesting of these. So that brings us, last but not least, where do we put our money? Well, I'm sure everybody has noticed the big uptick in relative strength in the small cap shares. This is the gap area that I was talking about on the Russell, and here was a prior little trading range. And these are not so overbought. We don't see the sell divergences on the MACD. So it's I think one of the safer ways to park your money, and at some point we're more concerned about risk and giving back profits than we are doing the high beta plays, which was the name of the game in that month of April. Want to get the bang for your buck. So my vote is park it in something safe, and I think that this is going to hold its gains fine because it's only just coming out of this trading range that you see here. And conversely, there are a lot of stocks that look like this. Goldman Sachs, sideways line here. So this is classic technical analysis. Definitely was not a relative strength leader during the month of April, but caught a nice bid here in the last couple days, along with Wells Fargo and some of these financials that have been beaten down. So make sure you go and look at the individual charts. Look for the things that have now a little bit of a base underneath them. And I think this would be a fine proxy for where to place your money during the month of June. All right. Lastly, my book will tell you all kinds of trading stories. If you haven't heard them before, you'll see my background and where I get some of my ideas from. So thank you very much for having me on your show.
Hey guys, Grayson Rose here with StockCharts.com. Thank you so much for watching. I hope you enjoyed this video. Remember, if you did, give us a like down below, leave us a comment. We'd love to hear from you. And most importantly, don't forget to subscribe to our YouTube channel for daily content from an incredible collection of technical analysts and financial minds. We'll see you back here very soon. Happy charting, my friends.